In our last unit, we took a look at working and earning, specifically how to make money and what to do with it. In this unit, we're going to take a look at deductions and expenses. So now that we have our money, what do we need to buy with it? We're going to start off with looking at deductions. Now, deductions is something that unfortunately we all have off of our paychecks. It's something we can't avoid, and it's something that we have to kind of learn to live with. So if you take a look at the worksheet, I'm going to start on this, but I'm actually going to jump over to a quick little slideshow presentation type thing. But let's take a look at the first part of this. Now, if you've got this sheet and you want to print it out, you can fill in the notes as we go. I'm not going to fill these in person, but I'm going to fill them in using the PowerPoint. So you can fill it in from there as well. I will come back and do some examples though on this sheet. But if you've got this sheet handy, and if not, you're welcome to take your own notes on a separate sheet of paper. We're going to jump over to this right here, which is essentially the same information, just presented a little bit nicer than my handwriting. So we're going to start by looking at Posco the Wonder Chef. It's an old friend of mine from high school. He works 40 hours a week, and he makes $20 per hour. It doesn't state that specifically, but it is $20 per hour. So how much does he make? Well, I think that from last unit, we could calculate this pretty easily. So we'd expect him to make $800, but his paycheck says it's only for $580. So the question is then, what happened to all that extra money? Where did it go and what is it for? So before we go too much further, we have to make sure that we know some terminology. And we hinted at it a little bit in the last unit, but now we're officially going to take a look at it. The first thing we're going to talk about is gross pay, also known as gross income. And it's the amount that POSCO will actually earn. So it's how much the employer actually has to give up, basically. So it's what you'd expect the pay to be. And then, more importantly for most people, is the net pay or net income, and it's the amount that you actually get to take home or get to keep. Because it is the amount you get to take home, it's often called take-home pay. So the proper name is net pay, but we often call it take-home pay. And in this case, we see that Paco's earnings, his gross pay was $800. That was 40 hours a week times $20 an hour. The amount that he actually gets to keep is $580. That's his net pay. And the difference between them, $220, is the deductions. So what are these deductions? What are they for? We're going to break them into two categories. The first ones are standard deductions, and these are ones that everyone are going to pay without a shadow of a doubt. There are exceptions to the other ones that we're going to look at, but we'll start off with the standard ones, which are pretty straightforward. So the first and biggest deduction from most people's pay is going to be income tax. So the government does tax us whenever we make money or spend money or own property. Those are the three big places that we end up spending a fair bit on taxes. And most of that actually comes from income. So the good news is you don't have to pay this if you don't make any money. And if you do make money, obviously you have enough to pay it because it's a percentage of what you actually make. So this is the government's share. Now, I do want to talk about this a little bit more later, but I'll point it out now. A lot of people do not like the idea of paying taxes. They are very upset that the government is stealing their money, but that's not quite the case. The government actually pays for a lot of things that you would have to pay for independently, and if you had to pay for them yourself instead of paying the government part of your income as taxes and getting back those services, it would cost you a lot more. So taxes are actually a good thing. Getting rid of taxes would be a bad thing because it would actually cost you a significant amount more money to get similar services to what you're getting now. Um, so don't hate taxes as much as you think you do. The next standard deduction is employment insurance, and this is essentially just like car insurance. If you ever lose your job, and this is important, due to no fault of your own, meaning you're not allowed to punch one of your coworkers in the face and then give your boss the finger and storm out and go collect employment insurance. In much the same way that if you had car insurance, you couldn't take a sledgehammer to your car and then call the insurance company and say, yeah, I need you to fix this for me. If you purposely destroy your thing, you are not covered under insurance. Uh, this works out to be a little less than 2% of your gross pay. So about 1/50th of your paycheck goes towards this. think about it this way, though. If you worked 50 years in your life and have to collect employment insurance for just one of them, you're getting your money back. So this is not, again, this is not a tax or something that the government is taking your money away. You're just buying insurance the same way you have to for your car and your house and other things. Canadian pension plan, same thing. This is not the government taking your money away from you. This is the government holding your money for you so that you have some money once you retire. Now, I'm going to point out there that it is a little money to live on when you retire. If it's your only income once you retire, you're probably going to have to live a very, very meager lifestyle. I'm talking like sharing a one bedroom apartment with two other people and eating Mr. Noodle every day. So it's not a lot of money, but it is enough to survive. Bare minimum for survival. So if you do want more than that, you're going to have to save some money aside in some other way, either through a pension plan wherever you work or through saving money into a bank account. So that constitutes, oh, sorry, I should point out that that is currently 1.78% of your gross pay. Again, not bad. Um, this is essentially saying that if you work for 50 years, you get 1 year of some money back when you retire. And that's actually not the case. Most people work less than 50 years, and most people get a lot more than 1 year back. And that's because this builds up some interest, and the government does some matching through some other programs and so on. So all of these, whether you like them or not, are actually good things that benefit your life in great ways. Now we do have other deductions, and there's a lot of these. I'm going to try and point out a few of the more significant ones, but there are ones that I'm not going to list here. Pretty much anything that could come off your paycheck would be considered a deduction. So one of those things may be a company pension plan. So if you are going to get an actual decent pension when you retire so that you can live a lifestyle similar to the one you live while you're working, then you have to pay into the pension. And usually the business or company that you're working for will match that in some way, shape, or form. And hopefully that will give you enough money to live on when you retire. So for instance, my pension plan will pay me about, works out to be about 60% of what I make while I'm actually working. It's not quite as much money, but there's also certain assumptions made. For instance, I probably won't have a mortgage much after I retire, so my expenses should be a little bit less. And also when you get older, several of your expenses go down because you aren't out doing all kinds of crazy stuff all the time, and you've got lots of things, so you don't need to buy more things. You know, you've got your furniture, you've got your whatever. So you don't need as much money as you did before. You may have a health plan. Now, most of you know that the government does provide free health care, but it doesn't provide everything. So if you're in a car accident, the government will cover it when you go to the hospital. But the things that they won't cover are things like prescription drugs, eyeglasses, other certain types of checkups. So those are things that you're going to want a health plan for. It could be for orthotics, it could be for braces for you or for instance, if you have children. But there are lots of things that are not covered that you would want a health plan for. Life insurance. So this is in case you don't make it to retirement. But if you are living with someone or you have a family of some sort and you don't want to leave them with nothing, because usually if your family lost you, they would miss you and they would have a hard time. And to add on top of that a financial burden of one less income in the family, um, that's a pretty significant thing. So life insurance is a good thing to put on there as well. There are some more. These ones you may or may not pay. One of them would be union dues. If you are in a job that's unionized, you have to pay this to keep your job. It's not optional. Everyone pays union dues. Everyone benefits from it. Other stuff. I'm just kind of listing other things here. There are different kinds of insurance plans. There might be some sort of savings plan through your employer. Something like donations. So, for instance, WRDSB employees can donate directly to the United Way through our pay deductions. And of course, we get to choose whether or not we do that and how much we donate, but that's a fairly common thing. And then there's basically a whole lot of other things that could happen. But that's kind of the fundamental ones. Okay, So I think we're going to stop there and go back to the actual sheet. Now, again, I'm not going to type in the answers to these top parts here. There's some blanks because those were all presented in the show, and you're welcome to have copied them down or to go copy them down now. What I am going to do, however, is jump into some examples. So we'll start off with Simone, who earns $17 per hour. And in a 40-hour work week, how much will she earn? So from last unit, we know how to do this pretty easily. That's just 40 times $17. And this is why we have calculators. 40 times 17 is $680. Okay, so just to think about this before we move on to part B, would that be gross or net? Is this the amount that she earns or the amount that she takes home? And since it appears to be the amount she earns, we're going to call that the gross pay. And I will say that that is weekly. So for part B, how much will her annual gross income be? So let's do 52 weeks a year. Now I will point out some of the questions we do maybe 50 weeks a year because most people actually get 2 weeks of vacation. However, you do usually get vacation pay, so kind of balances. Okay, so either way, we're going to assume 52 weeks in a year, so we're going to do 680 times 52. And so her gross annual pay is approximately $35,360. For part C, Canadian Pension Plan, better known as CPP and usually abbreviated that way, is 1.78% of gross wages. How much would Simone pay to her CPP per year? Okay, well, we do 1.78%. I'll make sure that decimal is quite clear and obvious there. 1.78% of 35,360. And just a reminder that we have to convert that percent to a decimal. So that becomes 0.0178. And the of 35,360 becomes times. In word problems like this, of normally means multiplication. So 35,360. And if I multiply that 35,360 by 0.0178, I get out $629 and what rounds to 41 cents. So in a year, that's how much she gives up to the Canadian pension plan. Now keep in mind, when she retires, she'll be able to collect that money back. So it's not disappearing. It's not a cost to her. It's just basically they're making you save so that you have some money to live on once you can no longer work or choose to no longer work. Question 2. Pierre earns $28,000 per year. How much is his weekly gross income? So in order to figure out his weekly income, we take his annual income and divide it by 52. So 28,000 divided by 52 is $538.46, or at least rounds to 46 cents. If he works 40 hours a week, what is his hourly wage? So we'll take that 538.46, divide it by 40, and we'll round off a little bit, but it looks like he makes $13.46 per hour, which is a little less than minimum wage. So I don't know what Pierre does for a living, but he should probably complain. Part C. Income tax is the tax you pay based on how much money you make. The more money you make, the higher the percentage. So not just the higher the amount, but the higher the percentage. Now, unless you're making quite a bit of money, so over about $80,000 a year, which is about $40 an hour. And if any of you can get $40 an hour jobs, take them, love them forever, and and definitely don't be offended that you're going to pay a little bit more in tax on it. You're still going to make plenty of money. But for most income tax brackets, rather than go through all the details of it, which is rather complex, for now we're just going to assume that it's about 20%. It'll be plus or minus a little bit of that depending on exactly how much you make. But for most people that are making between full-time minimum wage and, $25 an hour, something like that, 20% is a pretty good approximation. So let's estimate the amount of income tax Pierre makes or pays per week. So that's just going to be 20% of 538.46. And remember that that becomes 0.20. You could just write 0.2. The 0 doesn't do anything there. But 0.20 times 538.46. And when you punch that in your calculator, it works out to be about $107.69. And again, that might seem like a lot of money. It is a lot of money. It's 1/5 of your pay. But the things that you get back by paying taxes are well worth it. Okay, question 3. Nico earns $3,000 per month. What is his weekly gross income? Now, just a reminder that to go from monthly to weekly, we're not going to just divide by 4. We're going to figure out an annual first. So we'll do 3,000 times 12 to get 36,000 a year. And then from there, we'll do 36,000 divided by 52 to get his weekly, which is $692.31. Now, that says how much he made a month, but it doesn't say that he works 40-hour weeks. And in fact, he only works 34-hour weeks, which means he's got a slightly better hourly wage than we would have assumed. So if we take that 692.31 and divide it by 34, works out to be about $20.36 per hour. Okay, so not a horrible job. Now, employment insurance. This is, again, the amount that he pays in order to ensure that if he ever loses his job due to no fault of his own, whether that's because of a layoff or redundancy or the business closes or any number of other things, he'll be covered and he can collect some pay back, basically collect insurance because he's been paying insurance. So how much is he going to pay in his week? Sorry, per hour. Per hour. We're going to do this one per hour of work. So we'll do 1.88% of 2036, and that becomes 0.0188 times 2036. And when we punch that into the calculator, it works out to be about 0.38 or 38 cents per hour. Okay, not bad. It protects him if he ever loses his job. Again, due to no fault of his own. What percent of your pay will go towards paying CPP, EI, and income tax if we add them all together? Well, that should just be a matter of saying it's 20% for the income tax plus 1.78% for the CPP plus 1.88% for EI. And if I put those all together, 20 plus 1.78 plus 1.88, we get 23.66%. Okay, I'm going to just round that up a little bit and say that in general, if you assume that your deductions are going to be about 25% of your pay, that'll probably give you a pretty reasonable answer most of the time. Okay, from there, I think we've kind of covered everything there is to cover. We've seen how to do the math. The actual calculations aren't too bad. Really, if you understand the terminology and the ideas, um, you're in good shape to go. So from here, I'm going to let you try some practice problems. And now in this case, if I look at the answer sheet at the very bottom here, you'll notice that I've given some partial answers and some hints. So some of them don't actually state the answer. The first question, there's actually three people in the question, Simone, Pierre, and Nico. And I've given the answers for Simone. For Pierre and Nico, I have not given the answers, but at least they should be similar. So when you answer that question, you can fill in Simone's column and double check that it's correct, and then do the others. And while there are not answers there, um, there should be pretty comparable numbers. And what I mean by that is if, for instance, Simone is paying $5 for EI, Pierre shouldn't be paying like 300. It should be in the same ballpark because they all make kind of similar amounts. Okay, so I'm going to let you try the practice problems, and I'm going to tell you now that this unit test for Unit 2 is going to be a little bit different than the way it was for Unit 1. The Unit 2 test, instead of being unique new questions, is going to be questions from the homework. So what I might do is say, question 1 on the test might actually say, go back to lesson 2.1, which is this lesson, and fill in the answers for Pierre for question 1. And you'll notice that Pierre's answers were not given at the bottom, but Simone's were, and it's a very similar question. So if you have done all the homework, doing the test should be very straightforward and very easy. And if you've chosen not to do the homework, it may not work out so well. So I will leave it up to you to make decisions that will best guarantee your success in this course. I would recommend trying the practice problems and make sure that you ask me about them if you're not sure what to do or if you're confused by the question. Okay, I'm going to stop there. Try the practice problems. Let me know if you have any issues. And otherwise, I will see you in the next lesson.